The following is a presentation of TFNN. The following
better. This is an hourly chart, 30-minute chart over the past 7 days. And as you can see, on the 25th to the 26th, we had a relatively good move of almost, it was $25. And now what we've done is we've come down $40 from there, which is a 1.618 expansion. And as you can see, over the last 3 or 4 days, there's a 3 drive to a bottom pattern there with quite a bit of symmetry. You have an ABCD pattern, and you have the 1.618 expansion of leg 1, and you have a 1.27 expansion of leg 2. And then, of course, you have the 1.618 expansion of the move from the 25th to the 26th. All this means is that you have a very low risk here in gold. Buying it around this 1306 level, you don't have to risk more than about $3. When you stop and think it's a $130,000 contract, that is not very much. You know, that's like a bug on the windshield. That you just can't see it sometimes. It's just really very, very low risk. And it hasn't moved. Well, it's moved a little bit, but not enough to, write home to mother about. But there's a chance here that gold could move pretty good. Silver has been holding up even better. It's just really amazing how well silver has held up. We'll put silver up to take a look at it because because of the eclipse and the new moon that we have today, I really like that particular cycle. As you know, our good friend Norm Winsky from Astro Trends and Shane Schmolian from wolftrader.net use these numbers and days very, very heavily in their calculations. And by the way, both of those gentlemen are calling for a market turn to the downside, and it has turned down, and it's quite a bit lower than it was before. But Norm emailed me last night about 3 in the morning and told me that he had a full-blown almost sell signal. He said another down day today would confirm it. So we'll watch to see if we get that today. But as you can see from the silver chart here, I really wanted to see silver down at that 1807 per ounce level. This is Christmas silver, December. But, we're not even close to that. So I don't know if it's going to hit there or not. It's, holding up incredibly well compared to what gold and platinum, both platinum also, failed to it looks a lot weaker. Platinum and gold look a lot weaker than the silver. That's the main thing that we're looking at. Now, I wanted to, just because of the smart Alex that we have here in the room, we're going to put this to bed once and for all about astrology, folks. Okay, this is it. You can't dispute this at all. This comes from our good friend in the room, Mr. Marshall. And as you can see here, we made a solar eclipse right at almost exactly the right time, and we've sold off. So that's the end. No more questions. It works. No, it works part of the time, and that might have just been a coincidence, and probably was. But this is a good chart because it shows you yesterday that the low that we were looking for with that ABCD came in exactly at that 2160 level, stopped right there, and rallied 17 handles. Where did it go? Right up to the 78% retracement level. So until we take out 2178, the market has a bias to the downside. Any move below 2150, you'll notice, will set up a move down to 2147. And if that happens below 2147, that's really going to be bad news. So we'll see how this thing all works out. Remember, we've only got 2 more days. We got today, tomorrow, and we're off on Monday because of the Labor Day holiday. So there's going to be some rocking and rolling here in some of these things, I think, very, very dramatically over the next few days, especially into this. You say it, but, maybe it goes into a sideways motion forever. You talk about a sideways motion. Let me show you the bond market from Germany, folks, just to show you what it's done. In bond, remember, German bonds have a negative interest rate here. Also, like most of the 33% of the countries out of the Eurozone. If you'll notice here, since July the 24th, June 24th, when we had the Brexit, you'll notice that the German bond has been in a sideways trading channel, just as narrow as can be, for a very, very long period of time. Now, that could break out to the upside, meaning that rates are even going to go more negative, or it could break to the downside if we get below 165, and that would tell us that rates are going to go a little bit higher. They can only keep, well, I shouldn't say this because they can do anything they want regarding the Federal Reserve, but it defies economic common sense, actually. That's, ask yourself, who would you loan money to for a negative interest rate? Are you kidding me? That you don't have to be a rocket scientist to figure that out, for heaven's sakes. Give me a break. Okay, now I want to show a stock. We've had several questions about this stock, and I'm going to bring it up here. This is Mickey D's, McDonald's. I want to bring it up here so you folks can take a look at it, because it's making a very interesting you're making a very interesting pattern. As you can see, this is on the weekly basis. You'll see the ABCD pattern that's forming here at around a 382 retracement. And, so what we want to do is when we see this was asked by one of our listeners here at TFNN to take a look at this. And so that's what I'm doing this morning. I start out with the weekly. And the next thing I would want to do is I would want to go down to the daily chart. And when you see the daily chart, you're going to see a much different picture. After we take the break, you're going to see the picture.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're taking a look at McDonald's now on the daily chart. And as you can see here, we have a really nice symmetrical ABCD pattern here in McDonald's. That would mean you would take out the February lows. And believe me, folks, this stock could go counter to what the regular stock market is doing. Remember, it's a market of stocks, not a stock market. So McDonald's can go up when the rest of the stocks go down. We've seen this many times in different things. So, trade the pattern, and that's the main thing you want to do. But you want to see McDonald's get down another couple of bucks down to around this 112 area, and that would complete the ABCD, and it also complete the 382 retracement on the weekly basis. So if you're looking for something to buy, McDonald's looks like a very interesting one. They're certainly not going to go out of business, at least I don't think so. And but they do. This is a nice pattern, and it's perfectly symmetrical. It's all what you look for. Remember, when they fail, they go down a whole lot more. So if you get below 109 in McDonald's after the 112, you're most probably something is seriously wrong. Now, I've gotten more emails about this next thing we're going to talk about than anything that we've had in a very long time. That is the wheat, and I'm going to bring this up here to let you folks take a look at it, because when these markets go to areas where you're not expecting them to go, you didn't do anything wrong. The market is just doing what it's supposed to be doing. Your trade basically failed. You did the right thing, but the question is you can't stand in front of these things, folks. Roy Longstreet, one of the probably the greatest soybean trader of all time, in his book, Viewpoints of a Commodity Trader, he tells you the markets are seldom wrong. Men are often wrong, and you have to remember that. So you have to just keep taking little shots at it when you think that you've got something, but you can't buy something at 440 and see it go down to 391 and think you're a trader. The difference between a trader and an investor is a trader that didn't use a stop. So there is support at 385 in the wheat. Now, we hit 385 yesterday in Christmas wheat, and we're over an eclipse, and we're over a new moon. Both of those are the really powerful wheat signals. So, this is what I'm looking to do, is to buy wheat, but I'm not going to buy it until I see the market move up a little bit, and then when it pulls back, I'm going to buy that pullback. And that way I can quantify the risk that I have. Because I could still quantify the risk if I bought it at 385, risking 10 cents. I could do that also, but I would prefer to see the market pop up a little bit, buy the little pullback, and then see how it acts from that level. I could probably risk a lot less than 10 cents if I do it that way. Don't get discouraged if you can't understand where every move goes, because that's not going to happen. There's going to be things, and we've seen this in the stock market. Well, look at Google and Amazon. These things have gone to levels that we never thought would go to these levels, but that's in fact where they are. What you want to do is to try to find the easy ones, the ones that line up and make it real easy to see, what the patterns are doing. That's and not all of them are easy, but some of them are. The McDonald's trade, I would quantify that, as an easy trade. And I believe that when wheat does finally bottom, the shorts are going to be, you'll be surprised. It will probably go up 3 or 4 days, like a moonshot. But we'll see what's going on. Part of this is related to the dollar, because the dollar index, when the dollar goes up, commodity prices usually go down, and that tells you that we have some possible deflation coming here. We're having it across the board in silver and gold and oil and a lot of other things, beans, wheat, corn, cattle. I mean, just all across the board. And I think that the Federal Reserve is a little concerned about that, because the figures that they're dealing with, I hope you realize these are bogus figures when they're talking about the employment numbers that they do. They massage those numbers. That should be illegal for what they do to the employment numbers and stuff. When a person stops looking for a job after a year, they take him out of the sales force. If we put those people back in, I'm sure our employment number would be a whole lot higher, but that's what they do. They started doing this back in the 80s when we had really bad inflation. The first thing they did was to take out food and energy. Well, nobody uses food or energy, but that's what they do. Or they reduce the amount of the value in the Greenspan was a master at it. He certainly was, and he trained his protege Bernanke, who trained his protege Yellen, and they're also getting ready to make. I imagine the fellow from Neil Kashkari from Minneapolis will probably be the next Fed chairman, and but we'll see how all this works out here. Let's get back to some of these stocks that we want to talk about today, because I think it's really interesting here that we have some of these things. Speaking of the Fed and some of the things that they're talking about, this was one of the. Give me 1 second here. I want to blow this up so we can see it a little better. This is from a Gallup poll. It actually comes from the Deutsche Bank, but give me 1 second. And I want to put this up here so you can see it. It shows the tendency of savers of the consumer now is they want to be a saver as opposed to being a consumer. The problem that they have is they're not making any money off the savings. This quantitative easing has been a tremendous tax on the older people. Raise your hand, Larry. Okay, and it just really is. I mean, they used to get 4%, 5% interest, and they could live off that, along with the Social Security. You can't do that anymore. So that's an important concept to realize. I listened to Tom O'Brien's show yesterday, and I was listening to him talk about how Amazon has affected the retailers, and I see that several of these big shopping centers are now having trouble keeping tenants because they're going bankrupt, and that's the main thing that you have to be watching. So, it's really hard not to shop at Amazon, folks. Boy, they make it easy. Oh my goodness, never seen it as easy as that. All right, we want to take a look now here at the banking index. This is one that I think is really ripe for a sale. Now, this is what we would quantify as not an easy trade, but it is a trade that is easily quantified by your risk. So if you're going to sell it here at this 72.62 level, you put your stop about $3 higher, which is around 3% of the value. 3% of that be $3, and so you would put your stop at rate 70. Right around 75, right around 75.05, something like that. But it's made a perfect 78% retracement It's had an equal move up from the February to April level. So it's got several things that make it an interesting sale. Now, if you don't want to sell the index, take a look at either J.P. Morgan or Goldman or Morgan Stanley. Those are in the index. Those are the ones that you want to take a look at, and we'll be able to see what's happening. I've just been alerted that we're going to have an ISM number coming out at 10 o'clock. That'll be at the end of the show, so pay attention, the first hour of the trade, and we'll see, what's going to happen with that. We'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart of December Treasury bonds. We've now switched from SEP to DECE. So Z is going to be the number. That's the Z is for Christmas. So we'll be looking at the Treasury bonds. We're trading at around 169.07 right now. Anything below 168.24 is going to trigger another ABCD to the downside. And as we've shown you the last few days, that the bond chart has been quite bearish, and it continues to look that way each day. Now we're right at a 78.6 level right now, so there is a possibility that we could we could hold that level, but right now it's still a little too early to tell. But we are very, very close to some major support at that 169.04. We're trading at 169.07 now, so watch that with a great deal of interest. Now, I wanted to just give you an idea how weak the market really is, even though you're seeing some of these big moves of 17 handles in the S&P. It goes up and down, and it's like a yo-yo. But if you take a look at what really is, if you look at the Dow Jones, you'll see here that ever since the 23rd, we've had a lower tops. Each one of these strong rallies has been followed by a quick retracement to the lower lows, and that's a sign of a bear market. That could change at any minute, but that's what you're looking at this particular time. As we've seen with the New York Stock Exchange Index, it is even more pronounced because we make a 78% retracement in the S&P. We may only make a 50% retracement in the New York Stock Exchange Index. So that's a very important, thing to keep in mind. All of those things are important when you're trading. Right now, we're trading at around 2169, 2170 in the S&P. There's a tiny bit of support there, but very, very little, in my opinion. And I think we're going to be heading down towards that 2150 level sometime into Friday. But with the report coming out, the non-farm payrolls tomorrow at 5:30 in the morning, it will, send everything into the slot machine mode, and things will go a little crazy. But we should get a great deal of activity. Remember that the day before a holiday has a very high probability of the market closing higher, to the tune of about 70%. However, of all those holidays that we have, Easter, Christmas, New Year's, 4th of July, Memorial Day, the Labor Day one has the least highest probability. It's in the neighborhood of about 60% closing higher than the day before. So, and that's just a one-day phenomenon, folks. The day after that, nothing really counts, after that level. So just remind, these are just statistics. You can find those in Yale Hirsch's Stock Market Almanac. It has a great deal of super information in it, but you have to do one thing at a time, and that's just one statistic. That's all you're really looking at when you're doing this. The U.S. dollar, this is the one that is mainly making these commodities weaker. And as we've seen through the, let's just bring it up. I wanted to show you because we're getting ready to break through this, and that's what I wanted to see. It. Hold on one second, and I'll get it up here. You'll notice here, this is as of yesterday. It's not updated today because we already popping through again. But you'll notice yesterday's high was right at the 61% retracement. Actually closed down a little bit from that. Now we're back up to that level again. So anything, breaking above that is telling you this market is still accelerating to the upside. And, we are going to see a higher dollar and lower currencies. And that's important from, any standpoint of money or anything like that. Remember, look what happened with just a small report in the GDP today. You'll notice what happened here. The pound just took off like a rocket. Well, that's it's a really big move in the pound, 100 and some pips in a matter of a few minutes. So these are things that are telling you that you've got a market that has really got a chance, to go a great deal higher. And as we said many times, if we take out that July high, this is really going to be, something very dramatic. If you remember yesterday when we were looking at the pound, one of the things that we were showing you was that we had higher bottoms. Yeah, they are becoming normal for the pound these days, given the fact we had this Brexit thing. You'll notice that we had these higher targets. We had the 135 pattern on the downside, higher bottoms, and then all of a sudden, the market has higher counts for the ABCD. Well, this is what's happened today with the report. It exceeded these numbers by a great deal, but that just tells you that the market was going in the direction that it was supposed to go anyway. And that's the main thing. If we looked at the Canadian dollar, we're going to see the same thing, because now with the Canadian dollar, you'll see that it is up to the 78% retracement. We're almost up to this 131.60 level. and that would be the 786 expansion. Remember, the 61% retracement didn't stop it, so maybe the 78% retracement will not stop it. We don't know, and that's part of the problem, but it's also the good part about pattern recognition is that when it fails, you know you're wrong and you stand aside. When it works, it's a beautiful thing, and when it doesn't work, you stand aside. That's the key to what we're watching, is the way I see it. And I look at a lot of these things over the years, and they've kept you in the promised land for some time. So we'll see what happens as we go through here. Okay, we had a request to take a look about the stock of Nike. I wanted to bring this up. I'm always interested in. Hold on here, put this here, and I'll put this up here. I have a question about copper, but I'll cover that after the next break. We'll take a look at copper. But this is Nike. As you can see from December, we've had a really nice, strong trend line from the 78% retracement in March and the 61% retracement that we just had 4 days ago. That's telling you this trend is down. You'll notice we have lower tops, lower bottoms. Nike has been in a bear market for well over 7 months now, and it looks like it's, heading lower still. And so that's the way it looks. I mean, I don't see how you can be bullish on this stock. If it gets above 61, you could probably change your mind. But right now, I don't think that it has anywhere to go except to the downside. That's what it looks like. It's just a very bearish scenario of what's looking at this thing. So keep in mind, we have a lot of patterns that are completing, and we've looked at them all through the week. I cover them in the newsletter every week. If we look at all the the financials, we look at the banking index, and we look at the consumer staples and XRTs and all these other things, you'll notice that they are making some major pattern completions, and you don't want to stand in front of that. And that is, I think, is a very important fact that you want to be watching as you go through here. Someone's asked to take a look at the bonds again. I'm going to bring this up now, but what's happened here in the bonds now is we've switched from September to December. So you've got to knock off a point because there's a point differential because of the contract specifications. But we are getting very, very close to breaking out those lows. And remember that when we do that, we're looking at another couple of handles lower, and if we go below that, anything below 165 in these bonds, we're in big trouble. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we've been asked to take a look here at copper. As you can see here, you'll see this trend line that is defined by the 78.6% retracement. You remember that is the square root of 618. And if you take a look at this, it does form a really nice downtrend line here. So any move below 205 would certainly make this a break of a very significant trend line, in my opinion. We're trading at around 208 right now, so it is holding. The $64 question is whether it's going to hold, and we never know that. So what you have to do is to quantify your risk, and on this particular trade, if you were to do it, you'd be looking at about 3 cents, and that would take you below 205. And then you would have to get out. That would be $750 because it's $250 a point, roughly a $15,000 contract, and the margin on that will run about $2,000. So it's acceptable for a risk trade. We've had very, very narrow ranges, as you can see, over the last 7 or 8 days in copper. A lot different than we've seen in silver and in gold. So maybe copper is absorbing some supply in here, and it could be ready to go higher. You know one thing, below 205, you wouldn't want to mess with it very much, in my opinion. So see, right now we've had a little bit of a sell-off in the market. We're basically down just a tad, not very much happening. And we've got the euro still heading lower. Folks, the number to watch in the euro, and it's very important because of where we are in the dollar index, that euro number is going to be right around 111 even. There's a very strong 61% retracement there that'll come in. This is important enough to let me get this ready so we can take a look at it. Just give me 1 second. I'm not the fastest thing in the jungle anymore, so I just wanted to show you the ratios that we've got in here that are going to be coming in at this 111 area. This is going to be a really important spot because it is right at the 61% retracement of the low that we made way back on the 25th of July. Now this chart will be coming to you by Federal Express in just a matter of seconds. If you'll just give me those few seconds, I will get this ready for you and you will see it. And you'll see that we have a situation where the euro is going to try to make a stand here at the 111 and change area. We're down about 10 days from the high. That's, when we had one of those meetings, I believe. And so just keep an eye on this at 111 even. Anything below, 110.80 tells you that this thing is ready to go a lot lower. But it's going to be very oversold as we come into today. And just watch 111 even, because if it doesn't break much below there, that's telling you that you're going to, have some pretty good support. If you look at the other higher bottoms that we've had here since June 24th, when we had the Brexit vote, you'll notice that each of those has been higher, but we've had lower tops also. So we're in this really tight triangle or pennant, and we could come out of it, either way. So When you're trading it, intraday, you've got to watch it on an hourly basis and go down to a 15-minute basis, and that which brings us down to this 111 area in the euro to watch it very closely. Do the work yourself and see where you are, and that'll tell you where you want to be on some of these things, and that's the main thing of what you're trying to do when you're watching these things unfold, because you don't know which ones are going to work and which ones are not going to work. We never know that. That's the real key to these things, is to focus on how much risk that you have and not how much money you're trying to make. Think like a winner. A winner thinks, how much money can I lose? A loser thinks, how much money can I win? And that's the real key to doing that. So I wanted to show you one other chart that is in a downtrend, that is trying to break out of this downtrend, and that is the Japanese yen versus the U.S. dollar. This is one of the big ones, of course. One of Tom O'Brien's favorites, as he's been probably better at that than just about anyone. And I wanted to bring this up to you to show you where we are. And here we are. We're right here. And we'll take a look here at the yen, because we're only a very, very short 35, 40 pips away from a major 61% retracement. Hold on one second here. Okay, and that's what we're looking at. Okay, anyway, you can see here at this 104.30 level in the dollar yen, that's going to be some pretty stiff resistance, of course, but watch it very, very closely, because we've had lower tops, lower bottoms. This thing is in a bear market, so if it's going to turn down, most probably it'll be very, very close to that level. Now, I've been asked to take a look at Twitter. Twitter. I'm not a social. I've never had a social network stuff, so I don't know. I know very little about it. All I know is that a few weeks ago, Twitter made a perfect 61% retracement before having a perfect ABC to the upside, and now we're having a pretty strong rally back in Twitter. And as you'll be able to see this pretty easily, with this strong day that we're having so far today, it looks like someone is getting ready to probably try to buy this puppy out. But the key here is, if you look at the fact that the 61% retracement stopped exactly. You had a big gap down, terrible news, and it stopped. Even with that bad news, it stopped exactly at the 61% retracement at 15.69. And that is really an amazing thing. Now look at today's action. You've gapped. You were up yesterday. You gapped up today. That tells you that this market is going to have to stop right here. Otherwise, you're going to form another ABCD pattern that's going to take it up to around 26. So that's what it looks like with Twitter. You'll notice that the pullbacks on Twitter, the one from July into the end of July into July 25th, that was equal to the one that we had when we topped on the 15th and then came down into the 28th. So that's a very, very symmetrical chart, very easy to trade. And but right now it's certainly got a bullish bias. There's no question about that. It's the way it looks. But it's going to be at really strong resistance here this morning, no matter what. So that's another key to keeping an eye on. The overall stock market is holding up. We haven't had any really bad breaks to the downside. It's all related to the dollar, is my opinion, because if we get above those old highs that we had, above that 96.50 level in the dollar index, which with the equivalent of the euro breaking below 111 even, then that would tell us that these commodities are still under some great deal of pressure. Regarding the wheat, folks, I don't think there's anything to do in the wheat. I mean, wait till tomorrow. I mean, it has a really high probability of turning on new moons and full moons, and I said that. I mean, several times last week is to wait, and yet I still nibbled at it because of the fact that it was at a really, really key level that didn't hold, of course. But watch it really closely now, because now if you can get that wheat back into that 385 level, 388, you'll have a chance maybe tomorrow, because then if you buy it there, you can put your stop below 380 and you only have to risk about 8 cents, which is around $400. You can become a farmer for $400, which is no problem. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at this E-mini S&P. This is what a lot of folks like to look at. I think currencies are far, far better to trade, and so is gold and oil. But if you'll notice here on the S&P, we're already breaking down. We're now down 12 points from the high that was made last night at the exact 786. As you can see here, we've had lower tops ever since August the 26th. And we start to go lower. As a programming announcement, on Tuesday, September the 6th, we're going to have Norm Winsky on from AstroTrend, and hopefully later in the week, I'm going to try to have Shane Smolian from WolfTrader.net on also, and then we're going to get Bill Meridian on as soon as possible. I believe he's traveling now. As soon as he's back, we'll have him in from Cycles Research in Vienna, Austria. But watch these numbers here. Anything below, I know we're 20 handles away in the S&P from where we're looking at 2147, but anything below 2147 today or tomorrow is going to put a really big damper on some technical stuff, because that would be viewed as a false breakout, because we did make a higher high in the S&P, the NASDAQ, and the Dow. We did not do it in the New York Stock Exchange Index, so watch that. Now, we have some pretty good support right around 2165. That's nothing more than a retracement back from the numbers we had yesterday. It's, Mother, God, and country stuff. So, watch 2165. And below 2160 sets up 2147, the way it looks like from a technical standpoint. And these markets move very, very rapidly, so watch it very, very closely. Also, the gold and silver are ripe for a really strong rally because of the solar eclipse and new moon. So watch a breakout above 13.14 in the gold. If that does that, there's a possibility here that it can have a heck of a run, and you wouldn't have to put your stop any lower than 13.05, which would be right below the low of the low today. Same thing in crude oil. Had some pretty good support here in this 44 level, and I think it's got a chance also. And I'm putting a lot of emphasis on the solar eclipse and new moon in here because those are strong cycles that are apparent all the time.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.